Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. All-time highs. So most all major U.S. stock market indexes reached all-time highs this past week. And as someone I know once said, all time is a long time. There is obviously a sense of exuberance on Wall Street, even if it's not shared collectively on Main Street. And this is actually reflected when you dig a little bit further into the market dynamics. There are clearly some stocks that are doing phenomenally well, mostly the large technology companies. But the Russell 2000 index, not as popular as the S&P 500, the Dow, or the NASDAQ, is made up of smaller publicly traded companies and is actually down 3% so far this year and is still down nearly 20% from its 2021 highs. Now, this seems to be reflective of the growing divergence between have and have-nots in the economy as well. The question becomes how long the economy can persist with such a dichotomy before things reach some critical mass that causes a change in the status quo. And who will be the winners in the next regime? Things could look differently 6 months from now than they do today. Best to prepare early. For this week's featured insight, keep a long-term focus. Now, one of the biggest mistakes investors make is to be too short-sighted in their approach. This has become especially true in today's world where everyone wants everything right now, and attention spans have dwindled down to an almost unimaginable level. Being short-sighted, though, when it comes to investments can work in one of two ways, on the upside as well as on the downside. When markets are down and account values are moving in the wrong direction, it can be tempting to throw in the towel and make the pain stop. Now, that has always been the wrong choice to make. On the other hand, what most people don't think about is chasing the shiny hot stock because it keeps going up in value can be tempting, as the fear of missing out on life-changing gains can become irresistible. It's actually this type of dynamic that currently controls the marketplace. So don't let it lure you into making impulsive or imprudent investment decisions. Keep your focus on the long term by sticking to a disciplined investment plan. Looking ahead, big week for big tech. Well, we're in the heart of earnings season, and next week is the biggest week of earnings reports for the all-important technology sector. Apple, Microsoft, Amazon, Google, which now calls itself Alphabet, and Facebook, which now calls itself Meta Platforms, are all set to report earnings next week. Given that the NASDAQ index, which contains all these names, is up roughly 25% in just the past 90 days, that is, since the last time they all reported earnings, it's safe to say that market expectations are quite high. Now, historically, these companies have all done a pretty good job beating expectations. Nevertheless, the higher the bar, the harder it is to clear. So any missteps for any of these bellwether companies, whether it's in the reports themselves or in their outlooks going forward, could cause some turbulence in the markets. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.